You're watching Dukascopy TV. I'm Elaine Stenson, and today I'm joined in studio by Glen Millar, a director with Kinetic Partners here in Geneva. Glen, you're very welcome.
Thanks for having me. Pleased to be here.
Great. So we're looking at hedge fund regulations and the new ones that are coming into Switzerland. What will these new hedge fund regulations mean?
Well, for some, it's no change because they've been regulated here. They've had onshore hedge funds here in Switzerland for a number of years. But for those who manage foreign hedge funds from Switzerland, it's a big change. As we move from very near no regulation to the full might of FINMA, the Swiss regulator. Who will be looking at them in the same way that the FCA in the UK, the SEC in the US will be looking with a particular Swiss nuance, because every regulator has his own way of going about things.
Okay, and some fund managers were concerned that these tighter regulations and legislation would damage the hedge fund sector in Switzerland. Would you agree with that?
I don't think so. I've asked this question many times, and I think that the need, we're getting to a more level playing field around the world, and I think Switzerland is reacting to the AIFMD, the European equivalent legislation, which has just come into force the other week, and I think that it's probably in the interests of investors to have a well-regulated industry and managers who are subject to good prudential regulation. So, and some investors are putting pressure on managers to know why they're not regulated if they're not regulated at the moment. So, I don't actually see it's a negative per se, but just a sort of reality, a necessary reality now.
Would these new rules, in fact, attract investors on the other hand because they offer more protection?
I think if you've got an investor's looking between two entities, one regulated and one non-regulated, he'll probably go for the regulated entity unless there's a huge difference in risk reward, for the unregulated entity. At least that's what I'm hearing from the managers that I'm talking to here.
What's the main reason for bringing in these regulations? How necessary were they? Was there a big demand?
Again, we'll come back to investors. I think there probably was, but it was more to do with not being excluded from distributing products. I mean, the regulations cover three main activities: the management of the fund, the custody of the money, and the distribution of the fund. And it's the latter one that was the killer if an entity wasn't regulated, if a fund manager wasn't regulated, because with the new European regulations, he was likely to lose access to some important markets to distribute the product. So becoming regulated by FINMA and subject to the new rules actually keeps the doors open into marketing into these other European jurisdictions.
What are the challenges that some hedge fund managers may face trying to comply with these new regulations?
Well, it's a good question. For those that are used to being regulated in another jurisdiction, it will seem they'll say, well, we should be already fully compliant. What's new about Switzerland? Switzerland is a little bit more form over substance in a sense that everything not only needs to be done correctly, it has to be documented correctly. The organisation has to be well structured with a good segregation of duties between all the key functions within the organisation. And I think that the biggest shock for the Anglo-Saxon type manager coming here will be the immense amount of documentation that's required, and adapting a little bit to the Swiss law, which is not case law as in the UK. It's, Napoleonic. We have to have everything done in a certain way, and it's quite a challenge. But that's why there are firms like us there to help people through the process and ensure they get the result that they want when they do submit the application to FINMA.
So you mentioned there's a huge amount of documentation involved in implementing these new regulations. Are there also huge costs involved?
There are some costs. Inevitably, that's going to fall either on the manager himself or will be passed on to the investor. The costs in Switzerland are mainly to do with providing an adequate infrastructure in terms of staffing. There's a requirement for non-executive directors. A third of the board has to be composed of non-executive directors, and if you've managed without up until now, that will be a new cost. And certain, FINMA will require a robust compliance and risk function, and many smaller managers are going to struggle a little bit and have to put some extra resource into ensuring that they comply with the risk and compliance requirements of the Swiss regulator. But they only exist to protect the investor. That's the reason that those extra requirements are there.
So do you think it's a positive step, these regulations?
When I look back 2 years ago, and we looked as though we were going to be drafting draconian measures and driving hedge fund managers away from Switzerland, I was very, very concerned. But there was a lot of lobbying. The Swiss Fund and Asset Managers Association was a strong party to that lobbying series of changes that were added piecemeal to the regulations. And we've actually got a regulation, I think, that's quite reasonable now and comparable with what you'll see in the best regulated European entities.
And finally, at least 10 new hedge funds are set to launch in Switzerland this year, but none were set up in 2012. Can you explain, or do you know the reason why this was?
I can imagine. We had a lot of inquiries last year from managers looking to set up in Switzerland. We've moved many, many managers over to Switzerland in the last 5 or 6 years since I've been here. And what happened last year, people were worried about what the final legislation would look like. So they were holding off their decisions. And we have a number of managers that from the end of 2012 through to the first quarter of 2013 have actually formed their companies, started trading, and are filing their applications with FINMA. And that's just one quick thing there. Filing the applications, if you haven't done it already, you have until the end of August to announce yourselves to FINMA, and then you have a further 18 months from the end of August to comply with the regulations. That's for asset management. There are other different delays, whether you're a distributor or whether you were trading before the 1st of March or not. But if you're a manager here and you haven't done anything about registering, pick up the phone to your lawyer or give us a call here as you need to take some action potentially.
Okay. Great. Glen, thank you very much for that, and thanks for joining us today.
You're very welcome. Thank you.
And that's all we have time for now, but do check back later for further updates and interviews from the Dukascopy TV team. Bye for now.